Today, I am pleased to share with you the latest developments from the Indian stock market, which continues to navigate near all-time highs. As we look ahead to the U.S. Federal Reserve's widely anticipated interest rate cut, Indian shares have managed to hold their ground, trading within a narrow range. The BSE Sensex climbed 90.88 points, or 0.11%, to 83,079.66, while the Nifty 50 rose by 34.80 points, or 0.14%, to close at 25,418.55. Everyone eagerly awaits the Federal Reserve's decision, which will likely have significant ramifications not only for U.S. markets, but also for global equities, particularly emerging markets like India. The Federal Reserve is expected to cut interest rates on Wednesday, a decision that will come after Indian markets close. The main uncertainty lies not in whether the rate cut will happen, but in the size of the cut. While a 25 basis point cut seems almost certain, the probability of a more aggressive 50 basis point reduction has risen in recent days. Market analysts have suggested that the odds of a 50 basis point cut have surged to 67%, up from 50% just a week ago. Such a move could prompt foreign investors to shift more funds into emerging markets, including India, offering an additional boost to the Indian equity landscape. The Fed's decision will not only determine the near-term trajectory of Indian markets, but also set the tone for the coming months. Investors are particularly interested in the Fed's commentary on growth, as it will significantly impact foreign inflows in sectors that depend heavily on U.S. markets, such as IT and pharmaceuticals. These two sectors have a large stake in the U.S. economy, and any shifts in monetary policy there will likely influence their performance here in India. The Indian stock market, over the past few sessions, has shown resilience, buoyed by optimism and steady foreign inflows. 10 of the 14 sectoral indices rose today, indicating broad-based strength in the market. Among the leaders, the Nifty Realty Index was the top gainer, rising by 0.6%. The real estate sector has been gaining momentum, driven by increased demand and supportive macroeconomic policies. This growth has encouraged investors, making the sector one of the standout performers in recent sessions. Nifty Consumer Durables also posted gains, rising by 0.5%. This increase reflects growing consumer confidence and demand, which is crucial as we approach the festive season in India. The auto sector, represented by Nifty Auto, also contributed to the day's gains with a 0.3% rise, supported by an optimistic outlook on the domestic economy and the continued demand for vehicles. On the flip side, some sectors face challenges today. Nifty Media was the biggest laggard, falling by 1.2%. The media sector has experienced volatility recently due to shifting consumer habits and the overall pressure faced by traditional media companies in adapting to the digital era. Additionally, Nifty PSU and Nifty Metal were down by 0.6% and 0.4%, respectively. The metal sector, in particular, has been impacted by global trade tensions and concerns over demand in key markets like China. While these dips reflect some sector-specific challenges, the broader market remains resilient, supported by both domestic and global factors. As we look ahead to the Fed's decision, the question on everyone's mind is how this move will affect the Indian market's near-term direction. A larger-than-expected rate cut could ignite a rally in global equities, particularly in emerging markets. However, the Fed's commentary on growth will also play a crucial role in determining market sentiment. If the U.S. central bank signals concerns about slowing growth, it may temper the market's enthusiasm, leading to a more cautious approach by investors. In conclusion, the Indian stock market has shown remarkable strength, holding near all-time highs in the face of global uncertainties. With 10 of the 14 sectors gaining, and strong performances from key areas like real estate, consumer durables, and autos, the market remains poised for further growth. However, much will depend on the outcome of the Federal Reserve's interest rate decision and its broader impact on global markets. As always, investors should remain vigilant, carefully assessing both global and domestic developments to make informed decisions in the days ahead. This video is made for educational purposes only. Please don't make any investment decisions based on it. If you like the video, please like, share, and subscribe. Thank you.